Joining us now is CNBC's Natasha Turak. She joins us with more. And Natasha, more fluctuations in the energy markets. Tell us, what is the latest on the impact to Iranian energy production, and how concerned should investors be about the surges higher in prices?
Good morning, Emily. Israel took the unprecedented action over the weekend to strike directly at several of Iran's oil and gas facilities. A major target was Iran's South Pars gas field. Now, this is one of the world's largest natural gas fields. It's offshore and it's shared between Iran and Qatar. It had to go partially offline over the weekend as fires raged following Israeli airstrikes. The Israeli military also struck a gas and fuel processing and storage depot in Iran, as well as an oil refinery. Now, this is highly consequential for global markets simply based on the fact that Iran is a major global energy producer. Just to give you some perspective, Iran is the world's third largest natural gas producer after the United States and Russia. It also accounts for about 3 to 4% of total global oil output. Natural gas prices are up about 2% right now. Oil prices up 1% this morning, but of course they rose as much as 9% on Friday after the initial attacks. Now, at this time, it's important to note that the attacks have not yet interrupted oil exports from the region. It's also worth noting that based on a history of Middle East conflicts from the 1980s onward, the geopolitical premium that is added to oil prices tends to peak and fade within the first 3 months of conflict, often within the first month. Now, of course, this very much depends on the trajectory that the conflict takes. This depends on the state of affairs in the Strait of Hormuz and also the degree to which the United States continues to be involved or escalates its involvement.
And Natasha, international investors are on high alert regarding Iran's control over the Strait of Hormuz. Are we seeing any signs of change in the status quo of this critical waterway?
That's a great question, Emily, and that is something that investors are watching very closely. The Strait of Hormuz, which Iran is positioned to the north of, is a critical waterway through which about 20% of global oil shipments flow every single day. Now, in previous conflicts, Iran has threatened to close the strait, which would be highly, highly disruptive to oil markets. This could send the price of a barrel of Brent crude up into the triple digits. But at this time, it does not appear that this is any more than a threat. And it's also important to note that closing the Strait of Hormuz would backfire on Iran itself. Its oil shipments through the strait are incredibly important to its economy, its revenues, and in addition to that, its largest customer and its most important trading partner for oil, which is China. It would essentially be hurting its friends, perhaps even more than its enemies. It's worth noting that the 1.7 out of the 1.7 million barrels per day of crude oil that Iran exports, 3/4 of that goes to China. So any impact to the world's second largest economy will certainly have knock-on effects to the rest of the economy in the world as well.
And we're also, of course, tracking regional reaction. What are you hearing on the ground there?
Well, in the Gulf at the moment here, where I can speak from in the UAE, there is a lot of stress, and there's also frustration at Israel. The condemnations coming from the Gulf Arab states over the weekend and on Friday were swift and unequivocal. Saudi Crown Prince Mohammed bin Salman over the weekend held a call with Iranian President Masoud Pezeshkian, and he affirmed Saudi Arabia's support for Iran's sovereignty. He also held a call with President Donald Trump, and all of the states in the Gulf have been very unequivocal in their condemnations of what they see as unnecessary escalation, as preemptive strikes, and as something that will be very disruptive to their economic prosperity and stability, potentially. Now, we have to remember that at this time, despite years of fraught relations and tensions between many of the Gulf Arab states, in particular Saudi Arabia and the UAE and Iran, there is still this overarching desire for stability because, in particular, the UAE and Saudi Arabia are pursuing multi-year, multi-billion-dollar, in some cases multi-trillion-dollar economic diversification projects. I'll highlight Vision 2030 in Saudi Arabia, and these are very much dedicated to diversing these countries' economies away from oil. This hinges very heavily on foreign investment, on the ability to attract foreign capital, business deals, tourism. I mean, just as one example, they're building a Disneyland down the road in Abu Dhabi. And so the idea of a war in their backyard is very disruptive and poses a threat to all of these plans. So there is a hope that a diplomatic solution can be achieved, but at the moment, things remain very uncertain.
Natasha, thank you very much for bringing us the latest. Natasha Turak there reporting from Dubai.